Hey, it's David here, and welcome to the Wealth Warrior. Our goal is to demystify investments and show everyone how to build wealth very simply. I'm going to show you step by step how to set up a stock trading account and choose investments that will help free you from your paycheck to paycheck struggles. Now, before we get started, I want to make a huge shout out to all the food services people that are keeping us safe during this pandemic. A huge thank you, keep safe, and remember, this video is as much for you as for anyone, so please stay tuned. Now, people ask me, why did I decide to make this course? The truth is, it's painful to see wealthy people with so many freedoms, while so many middle-income people think wealth is unattainable. So they don't even bother to save money. I used to think that wealth was related to a comfortable salary. This is only partially true because you can still make 200 grand and spend everything, so it means nothing. I believe wealth really is how much you have in your savings. Now, this is no get-rich-quick scheme. This is how to permanently change your life step by step and build wealth very simply. Think this is nonsense? Check out this guy. That's David Chilton, the author of The Wealthy Barber. He created a best-selling book that actually shows you that wealth is within everyone's grasp, despite their income. You may have seen him on The Dragon's Den, or for you in America, the Canadian version of the Shark Tank. Whether you're working at McDonald's or Starbucks, or have some other great job, I will help free you from your paycheck to paycheck struggles. So buckle your seatbelts and let's get started. And one more thing, when I show you a stock symbol like this, that means the stock is generally a good buy. Don't trade it right now, but I'll show you how to trade it in upcoming episodes. Okay, let's continue. So my goal is actually to teach you how to trade without using a stockbroker to choose stocks for you. Yes, brokers may be required for some trades, but it can be costly for some transactions. So the goal of this simple beginner's course is to teach you how to trade online directly yourself. To do this, we'll need to follow some basic steps. In episode 1, we'll learn some basic stock trading terms. In episode 2, I'll teach you how to set up online direct trading. In episode 3, I'll give you some tips to help you save your money. In episode 4, we'll learn some good habits from the best traders. In episode 5, we'll learn when to buy stocks in the cycle. In episode 6, I'll help you develop your trading style. And finally, in episode 7, we'll look at your first stock portfolio. Now, each episode is meant to supply you with information to help you build your trading savvy and assist you in developing your trading portfolio from scratch. Your portfolio contains investments that you have chosen for yourself that best fit your trading style. In episode 1, we'll be familiarizing you with the stock market and some trading terms, which is essential to understanding this course. By the end of episode 1, you'll be able to understand stocks, mutual funds, and markets, understand some basic trading terms, be privy to some easy financial wins. I'm going to show you some really good stocks, and then get ready to get started. So in the next episode, we're going to help you set up your trading account. Welcome again to David the Wealth Warrior, a place where we have all made the decision to become financially independent. Yes, it's about money, but it's mostly about worrying less and having a little extra savings to do the most with your leisure time. Now, there are just too many get-rich-quick schemes out there. I'm telling you right now, if you want to gamble, go to Vegas, or buy a lottery ticket. There's no silver bullet. Now, some people can talk about day trading or some other fancy trading options where you can risk your investments. And you can actually, in these transactions, lose more money than you lay down. It's not really worth it. These types of trading are for savvy full-time traders, and I'm not devoting a lot of time to this. At the conservative end are bonds. In the next episode, I'll explain how bonds are actually not a good investment, especially when interest rates are really low like they are right now. Now, we can't just jump into investing, so please be patient while I define a few terms which are not really well understood, and I think everyone can benefit from these. So, first of all, what is a stock? You're actually buying a piece of a certain company. The price of shares of good companies will always go up over time. Okay, so as an example, if you bought $5,000 worth of Microsoft shares in 1995, you'd have $260,000. That's crazy. So that's over $250,000 with one stock alone. Another term is stock ticker. Each publicly traded stock is abbreviated by its ticker name or ticker symbol. So the ticker for Microsoft is MSFT, and the ticker for Apple is AAPL. You'll ultimately use these ticker names to identify and trade your stocks. Throughout this course, we'll be displaying certain stocks with the company name followed by its ticker symbol. So Microsoft will be followed in parentheses by MSFT, or Apple will be followed in parentheses by AAPL. Okay, now what is a mutual fund? Now, if you want to lower your risk and not just buy one company, you can buy a mutual fund. You lower your risk because you own the stocks of many companies with just one purchase. Stocks within the fund will go up at various rates, and you get the average return of all the stocks. Mutual funds come like stocks. You can buy shares in them, and you can buy all types of them. You can buy mutual funds that are centered on certain industries, on multiple industries, even on the size of the company. There's virtually unlimited options. But coming up soon, I'll show you some really good ones. Okay, let's define stock exchanges. I'm sure you've all heard of stock exchanges. These are the places where stocks and mutual funds are traded. Originally, these were physical places, and they still are, in cities like New York and Chicago and Toronto. However, you can get access to these stock exchanges through your online direct trading account. And I'll show you this in an upcoming lesson. Now, the most common stock exchanges are the New York Stock Exchange and the Toronto Stock Exchange, abbreviated NYSE and TSE. Okay, let's define stock indices now. Now, you don't have to know everything about indices, but a little background is necessary because, number one, this is how all stocks are tracked as a group. You've heard of the Dow Jones Industrial Average or the NASDAQ. Those are indices. Actually, some good mutual funds are actually based on these indices, and they can be very good to own. So I'll teach you a little more in upcoming lessons. Finally, all investors want access to the US and Canada. And great stocks like Shopify and Canadian Pacific are Canadian and mostly available through the Toronto Stock Exchange. They're Canadian companies, so you kind of need to know this. Stocks are actually listed on indices, and the main ones we are concerned with are the Dow Jones, the NASDAQ, the S&P 500, and the S&P/TSX, that's the Canadian exchange. So what are these indices? Well, the Dow Jones is a grouping of about 30 very large, now international companies. These are mostly composed of industrial stocks. In 1896, Charles Dow created the original index, which was dominated by 12 companies like American Sugar, US Rubber, American Tobacco, and Tennessee Coal and Iron. By the late 1920s, companies such as Goodrich, General Motors, Bethlehem Steel, Westinghouse, Mack Trucks, Standard Oil, Sears Roebuck, these companies were all part of the Dow. Recently, General Electric actually left the index and was replaced by Apple. And actually, just a few days ago, Salesforce, CRM, Amgen, AMGN, Honeywell, HON, replaced ExxonMobil, Pfizer, and Raytheon. This was apparently to add a little bit more technology and biotech to the index. Today, this index is dominated by companies like 3M, American Express, Boeing, Caterpillar, Chevron, Coca-Cola, McDonald's, JP Morgan Chase, Nike, and Microsoft. Because many of these very large companies are now international, they have been negatively impacted by the recent trade war with China and the coronavirus epidemic. This is one reason why this index has lagged behind some of its competitors. Okay, now let's talk about the NASDAQ. The NASDAQ was founded in 1971 and it stands for National Association of Securities Dealers Automated Quotations. It's a big mouthful. It was the first electronic index and stock market, and many of the stocks have a technology focus. Stocks in the NASDAQ 100 are companies such as Activision Blizzard, Adobe, AMD, which is Advanced Micro Devices, Alexion Pharmaceuticals, Alphabet, which is actually Google, Apple, Autodesk, and Applied Materials. This just names a few of them. Top stocks in the market make up 18% of the value of this index. These stocks, you know these stocks very well. These are called the FANG stocks. That's with 2 A's. So that stands for Facebook, Apple, Amazon, Netflix, and Google. These stocks have all grown incredibly fast and now dominate the entire stock market. And actually they account for about 12% of the entire world market. So they're very, very large. Okay, let's talk about the S&P 500. This is an index of 500 very large companies and is said to be the best representation of the US stock market. The name comes from 2 companies. The first is Henry Varnum Poor, which created Poor's Publishing in 1860. This company created the first investor's guide to the railways. In 1923, the Standard Statistics Company developed one of the first indices of all companies in the S&P 500. These 2 companies merged in 1941 to create Standard & Poor's. Since that time, this index has actually been one of the best and most consistent money makers. Mark Cuban, billionaire and owner of the Dallas Mavericks basketball team and member of the Shark Tank, has recently said, if you don't know too much about markets, the best way to invest your money right now is to put it in a cheap S&P 500 fund. Finally, let's talk about the S&P TSX index. This is the Canadian index. Although there are about 1,500 companies represented in the Toronto Stock Exchange, this index includes about 250 of the top Canadian companies. As I said before, Shopify, abbreviated SHOP, and Canadian Pacific, abbreviated CP, are very good stocks to own as of September 2020. So we're getting close to the end. If you like this content and want to learn more and follow along with the course, please press subscribe and click the bell for new postings. Your trading journey begins in our next video, so please stay tuned.